Okay, let's unpack this. Have you ever wondered what really goes on behind the scenes of the brands you wear every day? Especially when a company is navigating, a tricky economic landscape, but still manages to pull off some surprising wins. Today, we're doing a deep dive into Page Industries Ltd. They're the powerhouse behind brands like Jockey and Speedo in India and other regions. Our goal today is really to cut through the noise, the corporate jargon from financial reports and meetings, and bring you the most important nuggets. We'll explore their latest quarterly performance, their strategies for dealing with market challenges, and their vision for the future, which seems to be all about comfort, innovation, and sustainability.
And what's fascinating here, what gives us a really strong base, is the wealth of recent info we have. We've got their Q1 FY26 results, the full transcript from their 30th annual general meeting, and the latest earnings call. So this lets us connect the dots, between the big strategic announcements, the actual financial outcomes, and the direct questions from shareholders, from analysts. It gives you a truly comprehensive picture.
Yeah, exactly. So get ready for maybe some aha moments as we reveal how a leading apparel manufacturer is staying agile, staying committed to its core values, even when the market, throws curveballs. Okay, let's jump straight into the latest numbers then. Page Industries just put out their Q1 FY26 results, and well, at first glance, they've pulled off a really solid performance, especially considering some of those market headwinds we mentioned. What immediately jumps out to you when you look at these figures?
Well, what's immediately striking, I think, is how they've managed such a significant jump in profitability on what looks like pretty modest top-line growth. I mean, sales volume increased by just, 1.9%, reaching 58.6 million pieces, and revenue grew by only 3.1% year over year to ours, 13,166 million. But the real story, yeah, the aha moment for me is definitely in their bottom line.
That's right. And the bottom line is where things get, well, really interesting. Their profit after tax, or basically what's left for shareholders, after everything gets shot up by a remarkable 21.5% year over year. That's ours is 2,008 million. And their EBITDA, which is a key measure of core operational earnings before things like interest and taxes, that soared by 21.1% to ours, 2,947 million. It pushed their operational efficiency margin, the EBITDA margin, to an impressive 22.4%.
So the big question is, how did they manage such a leap in profits without a similar surge in sales?
Yeah, that incredible leap in profitability despite, modest sales growth.
Yeah.
It isn't just a win. It's almost a master class in operational leverage. It really suggests Page Industries isn't just like randomly cutting costs. They're showing some fundamental resilience. The management pointed to efficient raw material sourcing, stable sewing efficiency, essentially getting more out of their production lines, and continuous cost optimization. And crucially, they noted there was no general product price increase during the quarter.
Right.
It really seems to be about fine-tuning their internal engine. Right. And for those of you keeping an eye on investor returns, the company declared an interim dividend of Rs 150 per equity share just for this quarter. That builds on the pretty substantial Rs 900 per share they paid out last financial year. So that speaks to consistent shareholder value.
Absolutely. And digging a bit deeper into their financial health, the company clarified they are, for all practical purposes, debt-free. Any finance costs you see are mostly from things like advances from distributors and lease accounting, not traditional bank debt. That's a very strong position. Plus, they're becoming remarkably lean operationally. Their inventory days, basically how long stock sits around, dropped to 56 days from 64. That frees up cash, reduces costs. And their net working capital, the cash tied up in day-to-day operations, improved to 48 days from 54. These shifts show some powerful gains in operational efficiency and cash management.
Okay, so we've seen how robust their financials look, but numbers, well, they often tell only part of the story, don't they? The real test is how a company navigates a challenging market. So what exactly were the headwinds Page Industries faced, and maybe more importantly, how did they respond?
Well, they were quite open about it. They acknowledged subdued consumption patterns impacting the market. They mentioned factors like shifts in festive timing and also heightened geopolitical tension back in early May, which probably affected consumer mood. The management described the overall environment as marked by disruptions and uncertainties, with inflationary pressure hitting discretionary spending. But, and this is crucial, they also reported a steady recovery month on month. May was stronger than April, June stronger than May. That suggests perhaps the worst might be behind them.
And their response seems pretty comprehensive. They've really focused on being agile and cost-conscious, talking efficient raw material sourcing, optimizing how they use their manpower, tightly controlling expenses across the board. It's actually quite impressive how they've managed to protect those profit margins without resorting to price hikes in this kind of environment.
It really is, and a very tangible example of that is their gross margin expansion. They specifically mentioned improved sewing efficiency.
Hmm.
You can think of it as reducing the labor cost per minute, basically, getting more output from the same resources the same time. This is operational excellence directly hitting the bottom line, and that's often harder to achieve than just, putting prices up.
They're also investing heavily in digital transformation, which seems critical for any modern supply chain. We're seeing them roll out an enhanced distribution management system using Salesforce, and they're doing a full migration to SAP S/4HANA. These are big strategic moves to improve supply chain visibility, responsiveness, overall process integration, and alongside this, their online business continues to be a, quote, robust growth driver.
Absolutely. And it's not just about optimizing what they already have. They're clearly building for the future, too. Their continued capacity expansion is a big signal. They now operate 15 plants. That includes a new state-of-the-art facility in Odisha that just started commercial production, and there's another facility coming up in Karnataka. This reflects, strong long-term confidence and a definite commitment to scale up for what they expect will be future demand.
Okay, so beyond the numbers and the operational side, let's talk about the heart of their business, the brands, Jockey and Speedo. The management shared some pretty compelling data. They noted their brand health scores, things like top-of-mind awareness and most preferred brand for both men's and women's innerwear are apparently at all-time highs. That's quite something in today's competitive market, isn't it?
Oh, absolutely. That level of brand loyalty is truly enviable, especially in such a crowded space. And, one interesting aspect is how they sustain that edge. Product innovation is part of it, sure, but I think it's also the compounding effect of years and years of consistent brand building, really understanding their core customer.
Yeah, and speaking of innovation, let's touch on JKY Groove.
Yeah.
This is a new range, seems more fashionable, specifically targeted at younger consumers. They initially tested it in just about 50 exclusive brand stores and on their website, jockey.in. It sounds like a cautious, sort of measured step into a more fashion-forward segment, maybe aiming for more frequent style changes rather than just the classic long-term stuff.
That's exactly it. And what stands out to me is their methodical approach here. They're not just rushing into a broad rollout. They're carefully monitoring how consumers react, whether it's genuinely bringing in new customers and looking hard at critical business metrics, things like inventory turns, potential product redundancy. This kind of disciplined, data-driven expansion really speaks volumes about their risk management. They want to ensure new ventures don't dilute that core profitability they've worked so hard for.
And their market coverage is just, well, immense. We're talking operations across nearly 2,800 cities and towns, over 110,000 multi-brand outlets, almost 1,500 exclusive brand stores, which, by the way, are all franchise-owned and operated, which is an interesting model in itself, plus a significant presence in large format stores and, of course, online. That's a dominant distribution network.
It really is. And while they're expanding, it's worth clarifying their international strategy. They specifically stated they have no exports to the U.S., so any concerns you might hear about U.S. tariffs, they don't directly impact Page Industries' business. Their licensed territories are focused on India, the subcontinent, and the Middle East. And they've consciously invested in infrastructure there, anticipating, as they put it, a long gestation period for meaningful growth. Basically, they know it'll take time to see big returns there, but both Jockey and Speedo are considered market leaders in their key Indian segments, which suggests there's still huge potential right here at home.
Okay, so while financial strength and market strategy are obviously crucial, a truly forward-looking company often builds on, well, deeper values too. And it seems Page Industries isn't just talking the talk when it comes to sustainability. Their sixth sustainability report actually highlights some seriously impressive actions.
Yeah, their commitment to responsible business practices seems genuinely embedded in how they operate. It's not just a PR exercise. They've achieved an 18% reduction in energy intensity and a 29% reduction in greenhouse gas emission intensity compared to their 2019-20 baseline. They actually beat their own targets there. They've also improved water use efficiency by over 16% and, quite impressively, recycled 100% of their pre- and post-consumer plastic waste in the last financial year. These are solid, tangible numbers.
And it's not just environmental, right? Their social efforts are notable too. They've ensured 100% of their vendors and suppliers are Oekotech certified, which for our listeners basically means the products are tested and free from harmful substances. That emphasizes product stewardship. On the social side, they have over 20,000 employees, and about 80% are women. So they've focused on creating a safe, inclusive workplace. They mentioned 100% of the workforce has been sensitized on POSH, that's prevention of sexual harassment, and they're doing gender pay parity studies. They even got awarded Best Garment Industry for safety, which is a significant nod.
Absolutely. And this deep commitment to ESG, environmental, social, and governance, it isn't just about ticking boxes. I think it reflects a very strategic, long-term outlook. The company sounds confident about India's economic trajectory, fueled by rising consumption, digital acceleration. They're still aiming for double-digit growth once the market fully normalizes. It reinforces that their sustainable practices are actually part of a broader, adaptable strategy designed for sustained success, not just a side project.
So, okay, we've taken a pretty comprehensive deep dive into Page Industries today. We've unpacked their resilient financial performance, their agile strategic moves in what's been a challenging market, their innovation with things like JKY Groove, and that deep, measurable commitment to sustainability.
Yeah, what's really quite remarkable here is seeing a company that, despite all those external pressures, stays rooted in its core values while still embracing transformation. Transformation across pretty much every dimension of the business, from how they make things to how they engage with the market. It's a powerful example, really, of balancing tradition with necessary innovation.
So you've now got the key insights, the main takeaways from their latest reports and discussions. Hopefully, it's a bit of a shortcut to being well informed about this major player in the apparel industry. And maybe here's a final thought for you to mull over. Page Industries seems to be mastering this art of balancing robust operational efficiency, that real focus on the bottom line, with a very conscious, methodical approach to fashion-forward innovation, like we saw with JKY Groove. So how might this careful dance, this balancing act between core principles and evolving consumer demands, how might that influence the long-term relevance and success of established brands, not just in apparel, but really in any industry? Something to think about.